Netflix will be reporting their earnings after the market closes today. Are they going to meet or beat expectations? Well, they're coming off of a strong win of 14 Emmy nominations. I'm joined by Chris Ciaccia, our technology editor. So, they said it couldn't be done. It was a first for them to get all these Emmy nominations. It's all about the original content, but will that original content pay off in earnings?
Well, we've seen the stock have an incredible run year to date. It's up 185%. Analysts are expecting 40 cents on a little over $1 billion this quarter. I would expect that based off price action and recent momentum, Netflix probably beats earnings estimates, but we might see the stock tick down a little bit if they can't add as many streaming subscribers as Wall Street's expecting.
Kind of a sell on the news type of situation, because as you did say, they're up tremendously. When we look at the analysts' estimates, there's quite a few that are at a sell rating for this stock. I think they feel it's overvalued. And the price target average is $207. The stock's at $264 right now. So analysts really feel like this thing has run way too far.
Yeah, you've seen an incredible run year to date, and you might see a little bit of profit taking right now. It's had an incredible run. It doesn't seem to ever want to go down. It's a highly momentum stock, so you could see a little bit of profit taking after the quarter.
It seems like Reed Hastings, though, is starting to maybe get some believers, because of course we know he came under tremendous fire back in the day when he split the DVD and the streaming apart. But as we see, DVD is going down, streaming is going up, and they've basically replaced their United States Postal Service deliveries with their streaming deliveries.
Yeah, streaming really is all of the future for Netflix. Right now they're at around 30 million streaming subscribers. Netflix is slowly becoming the internet television cable network with original programming like House of Cards, Arrested Development, Orange is the New Black. Netflix is really trying to transition the model to move away from your traditional cable companies, and that's where streaming plays a part.
All right, there's a lot of talk out about maybe Amazon getting into original content and some of the other providers doing that. Does Netflix have to worry about that, or do you think that they're so far ahead of the game that they're not so worried about it?
In terms of original content, Netflix and HBO. HBO is far ahead of Netflix, but Netflix is slowly starting to catch up. I don't think they have to really worry about Amazon in terms of original content. What they do have to worry about from Amazon is streaming subscribers. Amazon Prime is exceptionally strong. You pay $79 a year for Amazon Prime. You get free 2-day shipping, as well as all the free movies and TV shows. That's where they have to worry, not so much as original content.
All right, so it sounds like the key thing that you need to focus on in these Netflix earnings after the bell is look for their streaming subscribers, see if that number's gone up and how much it's gone up, and then you'll see if you're going to be able to get the Netflix stock at a cheaper price. That's Chris Ciaccia, and I'm Deborah Borchardt for The Street.